The total estimated financing demand of the MSME sector in India is over 32.5 trillion rupees. Nearly 80% of this is demand for debt financing and the remaining 20% for equity. Most companies from the organized sector use internal accruals and informal sources to finance this already low equity demand. And one of the biggest reasons behind this remains that an equity infusion from outside investors would seek business transparency, something that most of these companies lack. One way that MSMEs can ease concerns about their business viability is by commissioning third-party assessments, like those conducted by credit rating agencies and accounting firms. Both of these can help a company check current operational efficiency and focus on areas of improvement, while also giving assurance to creditors and equity investors. To understand the process of how a company can get itself rated, we caught up with SMERA, an SME rating agency which is a joint initiative of SIDBI, Dun & Bradstreet and many public and private sector banks.
We look at business risk, we look at management risk and financial risk. However, the way these parameters are looked at depends on which industry these SMEs belong to. So when we look at say business risk, we look at the industry, what are the various factors that influence the future performance of the industry. When we look at business risk, we'll also look at operating efficiency and market position of the companies. We look at financial risk, which includes future performance of the company as well as the past few years of performance. When we look at management risk, we look at the management track record, their ability to take risk, ability to manage execution of projects, handle various kinds of risks that comes across, the corporate governance practices. So these are some of the things that we look at while looking at these companies.
Okay, and a lot of these companies, especially the smaller ones, are run by families and proprietorship on a proprietorship basis. Right. So what have you found? Are they willing to open up their accounts to a rating agency or an outside a body which will take a call on their creditworthiness?
Yeah, nowadays it's not so much of a problem, because I think SMEs have accepted that if they have to avail of the best benefits in terms of lower rate loans, getting bigger customers, it is important that they have to be a little more transparent. Now this has already happened in India, and as a result we ourselves have rated more than 34,000 companies so far.
Credit rating from companies like SMERA can make it easier for SMEs to attract venture capitalists and private equity funds, which are crucial funding options for growth companies. Seed Fund is one such investor which scouts for startups and small early stage companies that they can invest in, offering equity investment and management expertise to them.
We look at businesses that can grow. So we invest in early stage companies that we believe that there's an opportunity that will be disruptive and can grow to a scale, because ultimately we have to look for an exit. So that's pretty much what Seed Fund does. We're doing early stage because we don't just want to be a financial investor and sit back. We like to believe that we can add value given our experiences, help them kind of professionalize if it's a family business or an early stage business where, a founder may be great at what he does, but he can take it to level X, then what? So, we'll work with them on, we're very hands-on to the extent that they want us, but we don't want to intrude. So it's why we are what we do, because we want to do more than just investing capital. 15 years ago, there was no real idea of what venture capital funding is. If I look at my dad's generation, which is maybe 30, 40 years ago, how were they starting businesses? They were taking savings, and there was no concept of, friends and family or angel investing or early stage investing. This is all new. So, now there's that ecosystem come in, there's, globalization, so there's knowledge. The young students at IIT are aware of what, being a part of an incubator, accelerator. So all that definitely has kind of helped build us and, create an awareness where young people want to take that chance. And so definitely, I see like 100 plans online. We get like maybe 100 emails and business plans a week. So yeah, definitely there's been an increase in people wanting to start their own thing. In terms of listing and the SME listing platform, I think it would be a great way for us to look for our companies to exit. In fact, we are looking at it and evaluating it for one or two that we think potentially could go this route. But it's a little too early to say because our companies are early stage. But definitely it gives us one more option, right? It's adding to the various options, So, of course, we're looking forward to and hopefully looking to work with the SME exchange.
Over the last 6 episodes, we have showcased the enormous contribution of MSMEs towards India's growth. They continue to be the power engines of our economy despite the many challenges they face. As we draw to the close of this series, we hope the government will succeed in its resolve to iron out their issues, and that banks and other agencies will realize how these small businesses provide big opportunities for all.